We want to talk about three big macro events that I think are relevant for the near-term and mid-term investment landscape. For people who are new to this podcast, the Not Even Run podcast is meant to give people a sense for what it feels like to run a hedge fund. So we run this place, Orange Capital Partners. This is no investment advice. The purpose of this podcast is simply to give people a sense of what it feels like to run a hedge fund. And sometimes we talk about our positions. Sometimes we talk about the technologies behind it. The purpose of Orange Capital Partners is to generate wealth by investing in fundamentally new concepts and engineering practices. So we talk a lot about technology and in particular AI and how we see that fit into our investment thesis. Sometimes we talk about macro and political events, and because they do affect investment also, and I think it's very important to understand that. For example, right now we're in a phase on a global political scale that, to paraphrase Lenin, sometimes nothing happens for 100 years, and sometimes 100 years happen in 1 week. And we're in one of those phases right now. We have big changes in global politics and also here domestic in the US. So that affects us as a fund, and that's why we want to talk about it. So the three things we want to talk about is, one is DOGE, the Department of Government Efficiency. One is the situation in Europe and the massive change in the relationship between the United States and Europe. And the third is something a little bit more specific about the bond market, the reason why long-term yields are coming down in the U.S. So those are the big three things that I think do affect our investments, and that's what we want to talk about. This is Not Even Run podcast. It's March 3rd, 2025. This is Krim Delco. For the day, the fund is up 0.5%. The market is down 0.5%. For the year, we are down 26%. The market is up 2%. We're underperforming by 28%. So let's start with the first one. That is the DOGE, Department of Government Efficiency. What's the purpose of this department? Why is it a good thing? We think it's a good thing. And how should investors think about it? Excuse me. So Donald Trump, when elected, was talking a lot about draining the swamp, and which means getting rid of bureaucracy within Washington, D.C. In his first term, he wasn't able to do that. In his second term now, he wants to do it, and he has the help of Elon Musk. What Musk is doing a very entrepreneurial thing. He's going in there, he's looking at processes, and he's trying to streamline processes. I think there's three levels to DOGE. One is streamlining processes. One is getting rid of waste. And then finally, the last domino to drop, hopefully, will be getting rid of fraud. So we're not there yet. I think we're still in the processing kind of phase. Whether they will go after waste and fraud, that remains to be seen. We hope they will, because the goal is to balance the budget, and you will not balance the budget with a blow to government. So as a side note, this is creating a lot of animosity towards particularly Elon Musk and Trump. I think Musk is being used as a scapegoat here, and I'm pretty sure he didn't want that role, but he was pushed into that role because nobody wanted to be the dirty guy who actually does the dirty work and goes after domestic corruption, because that's what this really is. Whether you call it streamlining processes or whether you call it undoing corruption, I think the line is very blurred. That's why we have so much also resistance towards Musk and DOGE, because people are being cut their benefits, people are being cut their slush fund. When I say benefits, by the way, these are not legitimate benefits. These are corruption benefits. For example, you have a hospital is collecting payments for a sick person that doesn't really exist. So it's what the mafia calls a no-show, where you just collect government money. You have people who have mental ill, apps, for example, that can be used in schools, and the Medicare pays for them without actually doing anything. So things like that, the world of the United States government is full of this type of fraud and waste. And that's why I said it's not clear where DOGE and Trump will draw the line. But fundamentally, what this means is that we will have a more streamlined government, no matter what happens, no matter whether we balance the budget, no matter whether we actually have fiscal responsibility or not, that's a different story because that also depends on Congress, and obviously after 4 years we'll have a new administration. So things change. But one thing the DOGE will do, it will instill a culture of efficiency, and it will make it unprofitable or what's the word, unpopular amongst proponents of government profligacy to continue doing that. So that's a good thing because it will reduce the overhead that we're dealing with. I think the U.S. government has been increasingly resembling a cancer-infected body that is, dysfunctional, and I think that's going away. I think that's a good thing. So we're very happy about that. Now, having said that, we also believe that DOGE will have a lasting impact on businesses because, again, the line between corruption, waste, fraud, and overregulation is very blurred. And overregulation sometimes is just there to create the fraud. For example, the SEC under Gary Gensler was, in my opinion, directly creating problems to people so then the SEC lawyers can go and solve them. So there's this revolving door that has been, crippling our economy. So all of these things are good, and we believe that people are underestimating the effect of DOGE on the economy. We're very bullish on that. We're on the side of, let's say, ARK Invest's Kathy Wood. We think we can have a lot of real growth just because we're relieving the economy of this type of crippling effect. The same way, by the way, corruption hinders the progress in the economy. On the flip side, corruption, if you remove corruption, it also benefits the economy. So that will be our take on DOGE. I think it's important to note that the purpose of DOGE is to really cut the fat of the government. And while that saves money for taxpayers, while that saves money for bond issuance, then we have to issue less bonds and therefore burden our future generations less with fraud and wasteful spending. It also creates a more efficient government. And that, to me, is a much bigger effect because a more efficient government is like energy that is free for entrepreneurs to pursue their dreams. And that is really what drives the economy in the United States. So we're very, very hopeful that the DOGE will work. Some people talk about austerity. I just want to put that myth out of the way. There is no such thing as austerity when we talk about streamlining government. What Musk is doing with DOGE has never been done before in a Western liberal democracy, as far as I know. It has been done actually before in dictatorships, some dictatorships have done this, streamlined their government, maybe not necessarily to save money, but to have more control over the government. But nevertheless, the impact was the same. You reduce bureaucracy, you make it much more streamlined. And some of that is happening. And I think that's why also the social backlash is kind of, people call Trump and Musk Nazis. It's not because they are engaged in genocide, but it's because they are streamlining government. They're circumventing some checks and balances because the checks and balances themselves became a source of the corruption. Of course, that's a slippery slope, and we can talk about it. There's a whole other episode about the risks of that and how this can, in the worst case, actually turn into a dictatorship or something like that. And that's a legitimate fear that people have. I think that's okay, but I think we have to take that risk because the other path, the deficit spending was just bankrupting the country anyway. But I just want to say something about the austerity argument. This is not austerity. Austerity is when a country is living beyond its means, like Greece or Portugal or Spain, and then you cut the debt market. You just don't give them money anymore, and they're totally left with their pants down, right? That's what austerity actually means in the parlance of financial economists. What we're doing here is restructuring. This is a lot more like when a private equity firm buys a company and gets rid of costs, the company gets better and stronger. And if you apply this to a country, actually, the effects can be enormous. I think we've seen effects like that, let's say, when Chile got reformed
under Pinochet. And I know it's a bad example because he was a dictator, but from an economic perspective, it was a huge success. What Milei is doing now with Argentina is a huge success. To my knowledge, people aren't being put in jail and killed, or at least not public knowledge. So it's, we can do this in a more civilized way, and I think it's really optimistic for the U.S. and by the way also for the rest of the world. As a segue, I want to use this now to talk about the bond market, because what we've seen in the last couple of weeks is a decline in long-term yields, which is buoying the market. It's very good, of course, for, let's say, for Tesla and companies like that, because the monthly payments come down, the margins can go up, all these things are good. The question, of course, is why is this happening from a macro perspective? And there's a couple of ways to think about this. With financial economics, it's always a lot of factors, but one of the main factors that we believe has happened is the following. Under the old administration and Finance Minister Janet Yellen, she has been basically issuing a lot of short-term bonds, financing the massive deficits that the United States was, piling up under Biden and Harris. She was financing this with short-term debt. So what she was doing is kind of like living like a person that has 5 credit cards and just constantly rolls credit cards, right? And that was considered bad financial management, but it was for the short term, keeping the bond markets a little bit more in check. And we can talk again. This is a whole episode about just why that's potentially beneficial in the short term and really hurtful in the long run. So what Finance Minister Bissett now is doing is he was expected to move his issuance of treasuries more to the long run, and that's what the market was anticipating. So they front running, and that's why the yield went up a lot after Trump won the election. We thought that it was steepening of the yield curve and things like that. We were wrong, actually, because now the yield's coming back and the yield curve is flattening, and we believe that's partly because Bissett said that he doesn't want to roll out, bond issuance to the long term, and therefore there is a good chance that the people who front ran, so short the treasuries, are now buying back those treasuries. Now that opens up, of course, the question: okay, so how is he going to do it? Is he going to keep issuing debt in the short run? Well, the answer is maybe point one of this episode. DOGE. Maybe we will not need to issue that much debt. In fact, maybe we won't even have a deficit. And if we don't have a deficit, if we balance the budget, then all we have to do is roll that. Now, rolling that is also a problem. It's not easy to roll 36 trillion. Let's say we roll 1/10 of that. It's still 3.6 trillion. What we mean with rolling is you have bonds that are maturing and you have to refinance them by issuing new bonds. That's what rolling means, because clearly we don't expect the U.S. to pay down that, at least not anytime soon. But again, if we can refrain from issuing 2 trillion of that for deficit spending, if that is actually in the cards, then that is a huge boost for the bond market and, in our opinion, of course, for the economy. Because don't forget, like I said, there's a lot of sort of correlated effects. For example, if we balance the budget, we have less debt issuance that allows liquidity to go into more productive investments than buying government bonds. And imagine if we could also lower the tax burden on people, which is, of course, under discussion in the Trump administration. That would mean that we have a huge boost in entrepreneurial activities and things like that. If you could lower the marginal tax rate, which, in my opinion, is one of the biggest factors that stifles economic activity, we could have, almost a Goldilocks situation where lower marginal tax rates, lower debt issuance, and more entrepreneurial activities drive economic growth, which is the argument for real growth. So again, we believe that DOGE and the bond market are related, not one to one. It's not like the bond market's here that coming down because of DOGE. It takes a lot more for the bond market to react than Elon Musk talking about government efficiency. But having said that, still there is this effect, and the fact that Bissett doesn't want to roll out, that is on one hand a technical thing, but it could also be a signal that, hey, maybe I don't need to, and that is being taken very seriously by the market. Lastly, I want to talk about the global aspects of recent events in Europe, in particular the withdrawal of the Trump administration of unconditional support for the Ukraine. Now, what does that actually mean? It means that we here in the United States are pulling back from the European theater and focusing on the Asian theater. Trump has said that. Hexet has said that. Our defense secretary, Marco Rubio, our secretary of state, has said that, and others have said that too. So what that means is, and I think it makes a lot of sense for the United States to focus on the player that is actually strengthening, which is China. And what I mean by that is, in particular, no matter how you slice and dice it, the strongest opponents in any kind of global politics are always the countries with the strongest economies. And the strongest economies, particularly today, are the ones that have innovation, that grow, that have technological savviness, and that is China. That is unequivocally China, and not Europe. Europe is stagnating technologically, particularly through innovation, is very pedestrian in Europe compared to China and the United States. So we are well versed not to focus our efforts too much onto Europe. Now, we can't just drop them, of course, and we don't want Russian hegemony in Europe. That's not a good idea. So what's happening is that the Europeans are actually jumping on the bandwagon, and they are talking about investing more in defense and defending themselves. Now, my opinion about that is that that is actually not going to happen because there is no such thing as Europe. But that doesn't mean Europe cannot defend itself. Europe can defend itself really well. I think just it has to happen through the path of the nation state. So the nation state, particularly Germany and France and Italy and England, the large countries, have to define their own particular defense, invest in their own defense strategy, buy their own equipment, and then coordinate on a European level. But you will never see a soldier going to war in the name of the European flag. That's not going to happen. I'm willing to think that. But you will see soldiers going to war under the UK flag, the French flag, the German flag. That will happen. Yes, it sounds a little bit maybe retro, like back to nationalism and things like that. But that's the world we live in, and Europe is much better served to follow the natural course of things than to have this moral elitist imposition of thought and how one is supposed to feel and all of these things. Because people don't feel it. People don't feel a common Europeanness. They don't feel Europe has to defend tooth and nail every country that is part of NATO or the EU. So if the US marches into if Russia marches into the Ukraine, then so be it. It's not ideal, and we can hopefully prevent them from going further. But we can't also ask them to give all the land back. So anyway, I don't want to go too deep into that. That's, of course, a very deep conflict that can be discussed at length. There's lots of channels that do that. What I want to add here is simply the fact that with our withdrawal and a focus on China, we're going to do two things which are amazing for the United States. First, we're going to lower the conventional budget expenses that we have by protecting NATO from Russia and leaving that to the Europeans. Excuse me. And second, by focusing on China and the potential conflict with China, I think we will also automatically start investing more into advanced technologies, whether that is quantum networking, whether that is cybersecurity, other cybersecurity endeavors, whether that is drone technology, AI. Those are the warfare technologies of the future. I think we're much better advised as a country, as a strategic as a place with strategic military interests to focus on the actual enemy that is going to be a real adversary. Maybe not enemy. Maybe China will not be a real enemy in a sort of Soviet Union type way, but there will be an adversary. There will be a competitor to us because they're really good at what they do, and they have technology, and they have money, and they have capital, and all these things. So we need to focus on them and sharpen our edges around them, not sharpen our edges around a has-been continent like Europe. Now, what's going on with Europe itself? To us, that is of concern because we think Europe is an important market for Tesla. So we certainly don't want Europe to turn into some sort of middle-aged, dark age type, no event type continent. And it doesn't have to be, of course. Europe has wealth. Europe has a well-educated workforce. What they don't have is, in my opinion, a practical and useful political class. The political class in Europe is really retro, very behind. I mean, it's like imagine most of large European countries are run by people who resemble Kamala Harris and Biden and people like that. So unfortunately, that shift that the United States inspires around the world typically hasn't happened in the large countries. The 21% that AfD got in Germany in the last week's election, in my opinion, was disappointing because the AfD is a party of our alternative, as they say in their name, away from this political class that is putting their head in the sand and walking on the moral high ground and totally defying reality. And that's very, very dangerous, particularly in a place like Europe. That this reminds me of World War One, when that was done by the leading classes of Europe, and then they ended up in a clash that ended up in this great war. So, to summarize, the three big events that we see are all positive. One is DOGE, one is the bond market, yields are coming down, and third, we have global geopolitical repositioning, which is very, very positive for the United States because we will spend less money on a has-been conventional warfare type situation in Europe, and we will sharpen our edges much more on the real adversary that we're going to have going forward, which is China, which will also force us to invest in new, innovative warfare technologies in general. We will hopefully understand how important AI is, how important quantum computing is, all of these big, big things, maybe fusion, rocket technology, all of these things matter. And having a competitor like China will put that much more on the sort of front burner, and we will not waste our time with European bickering. Let them figure it out. I am hopeful as a native European that Europe figures it out, that there is a union. I think the union can happen, but it has to happen through the nation state, not in the context of current EU. So what we predict with Europe is that actually the EU will fall apart over quarreling for budgets for defense, and that the countries should take the defense into their own hands and then cooperate at a multinational level to make sure that defense is solid against places like Russia. Thank you.